U.S. dollar surges. Fed chair succession rate cut bets explained. In a surprising turn of events, the greenback has surged against most currencies, yet it's still within reach of the lows witnessed last Friday, as the market remains in a state of consolidation. The focus is now on President Donald Trump's nominations to the Federal Reserve Board, following the departure of Fed Governor Adriana Kugler and the need to fill the position of commissioner at the Bureau of Labor Statistics. This shift in personnel could potentially alter the landscape of monetary policy in the United States. Traders are ramping up their bets on the Federal Reserve easing its monetary policy, with expectations that the easing measures will extend all the way through 2026. Goldman Sachs, a leading financial institution, predicts that the Fed will implement 3 consecutive rate cuts starting in September. This forecast comes amid growing concerns over the impact of tariffs on the global economy. Analysts suggest that the Fed might need to harden its stance to protect its independence, a move that could further influence market dynamics. Despite the market's anticipation of rate cuts, investors remain wary of the ongoing tariff saga and its potential repercussions. The uncertainty surrounding trade policies has kept the market on edge, with many waiting to see how the new appointments at the Fed and the Bureau of Labor Statistics will affect the economic landscape. President Trump has announced that he will soon reveal his choices for the vacant positions, including the next Fed chair. He has ruled out U.S. Treasury Secretary Scott Bessent as a potential successor to Jerome Powell, whose term is set to end in May 2026. The White House is currently considering 4 candidates for the role. This decision could have significant implications for the future direction of monetary policy. According to Mark Chandler, the chief market strategist at Bannockburn Forex, the market is currently in a holding pattern, with recent data having little impact. The focus is now on the upcoming announcements regarding the Fed and the Bureau of Labor Statistics. The data this week is considered old news, with most of the attention on the Q2 GDP figures. Analysts believe that the departure of Kugler and the firing of the BLS commissioner could reinforce the perception that the Federal Open Market Committee's independence is intact. The new appointees will have a crucial role in shaping the committee's decisions, as they will each hold a vote. However, the market's reaction to these changes remains to be seen. In terms of economic indicators, the U.S. services sector activity showed a flat outcome in July, with little change in orders and a decline in employment despite a rise in input costs. The Institute for Supply Management's Non-Manufacturing Purchasing Managers Index, PMI, slipped to 50.1 last month from 50.8 in June. Economists had expected the services PMI to rise to 51.5. A PMI reading above 50 indicates growth in the services sector, which accounts for more than 2/3 of the economy. The euro has dropped 0.2% against the dollar, trading at 1.1553. This has pushed the dollar index, which measures the U.S. currency against 6 major counterparts, up 0.30% to 98.88. The weak U.S. jobs data from last Friday has fueled expectations of Federal Reserve rate cuts, leading to a sharp decline in the dollar. U.S. rate futures now indicate an 88% chance of a rate cut in the Fed's next meeting in September, compared to 35% a week earlier. The futures also suggest 60 basis points, BPS, of cuts by the end of December and 130 BPS in rate declines by October 2026, a 30 BPS increase from the levels seen on Friday, before the U.S. jobs data. Goldman Sachs anticipates that the Fed will deliver 3 consecutive 25 basis point rate cuts, starting in September, with a 50 basis point move possible if the next jobs report shows a further rise in unemployment. The dollar has risen 0.2% to 147.42 yen, following the release of the minutes from the Bank of Japan's June policy meeting, which revealed that some board members believe the central bank could resume interest rate increases as trade tensions ease. Sterling has remained stable against the dollar, as traders anticipate that the Bank of England will maintain its rate guidance at this week's policy meeting. The focus, however, remains on tariff uncertainties, particularly after President Trump imposed new duties on imports from several countries last week, heightening concerns about the global economy's health. The 15% tariff that European Union goods face when entering the U.S. is all-inclusive, a senior EU official confirmed on Tuesday. The Swiss franc has remained flat at 0.8072 per dollar, after dropping 0.5% in the previous session. However, it is still above the levels seen before Friday's data, at around 0.8128. Switzerland is looking to make a more attractive offer in trade talks with the U.S. to avoid a 39% import tariff on Swiss goods that threatens its export-driven economy. As the market awaits the next moves from the Fed and the Bureau of Labor Statistics, the impact of these changes on the global economy and financial markets remains uncertain. The coming days will be crucial in determining the direction of monetary policy and the potential for further market volatility.